London Metal Exchange more on the base metals side, so not a silver expert. But what you see with all of these commodities markets is the ability to have supply tightness. Certainly on our markets, we're seeing that on copper as well. And then obviously that causes your spot prices to move up above your futures prices, that backwardation that we're seeing across a number of the metals right now.
I know earlier this year we'd seen some big dislocations between London and New York across a number of key metals amid concerns that some might get caught up in U.S. tariffs. What are you seeing now in terms of the arbitrage between New York and London? Which metals have stood out? Yeah, so this is a really interesting feature, and it comes back to the way the different exchanges are set up. So, the LME, we've been around since 1877. We were born in a high tariff environment, and so we've been really lucky to inherit a contract structure where all of our deliveries are duty unpaid. So what we're trying to provide is that global baseline price that doesn't reflect any particular country's tariffs. And so that's designed to be the sort of underlying fundamental price of the metal. Now, what you then see in other markets, such as New York, is you see that it's a duty paid price. So that's more appropriate for reflecting the actual onshore costs of the metal. And so what you end up getting, particularly on copper, is an arbitrage which reflects people's views of what a particular country is going to do on its tariff policy. And that's actually really interesting, as an indicator, a kind of weighted average expectation, if you will, on what the tariff's going to be on that commodity in that country, but also kind of creates some dislocations, possibly some trading opportunities, or also some trading challenges.
Is there a medium-term supply issue with copper? I read about amalgamations in the sector. I see quite bullish prospects from the miners themselves, and yet I don't see an increase in demand necessarily coming from the major economies.
Yeah, so this has been a key topic of LME Week, which we're in at the moment. I think the consensus is there absolutely is that medium-term demand driver. You see that across a number of applications from, the very mundane, the air conditioning, the construction, through to the cutting edge, the AI, the electrification story, etc. However, I think the consensus right now, most of the price action is being driven on the supply side. We've seen a number of supply disruptions, including, in some cases, tragically, with fatalities in mines, which just makes you realize the fragility of these supply chains and obviously the human impact as well.
But the Chinese economy is apparently growing at 4.5%, but in reality, maybe we're not seeing some of the impetus and desire for copper that we saw a couple of years ago as well. The US economy and other global economies, which whilst copper is an important metal, and of course Dr. Copper plays a very interesting predictive role for many in the world economy as well, we're still trading the same kind of prices, I think. Our chart I was looking at just now, we were in 2022. Yeah. So I don't know, there is, I think, rather than just kind of saying, there's I know there's a Grasberg problem, there are other issues as well, which is tragic as well. But the fact of the matter is, by and large, there's a lot of copper around. Yeah. And I don't want to get too caught up in this supply chain issue problem.
No, I think that's a fair point. And it really has been for several years this question of, say, the medium-term bullishness, which we see out on the futures curve, versus at the cash end, the fact that there may be more of the stuff around. Now, again, that's reversed in the last few days. We're actually back in backwardation on copper. But I think the key point is about the market being able to adjust through that. So just to give you an example, you mentioned China. One of the big reasons that we've opened delivery warehouses in Hong Kong this year is because we want to create that ability that if there is a medium-term bullish call from the West on AI or whatever the trend might be, but as you say, people in China may not be seeing that immediate demand, we want to give them the ability to deliver physical metal into warehouses in China, in Hong Kong, China, in terms of how if they can deliver back to the LME, and then you can arbitrage between that perhaps that short-term supply and the medium-term bullishness. So that's what we want to give people the ability to do. Yeah.
For me, that's quite worrying in some way. No, I mean, it's great that you can do that arb, and obviously it gives you great facilities. But if China is putting copper back in warehouses to sell potentially to the West as well. What is that telling me about the China growth story and about the AI growth story? Because the Chinese are moving gangbusters as much as the Americans are, aren't they?
Yeah, I think that's right. But again, these things are kind of fairly multifaceted, right? So
for sure.
You know, it's interesting. We talk about copper for cooling, but then of course you look at the next technology and you cool with graphene and other technologies as well. So you know, that's what I love about these markets, right? There is this underlying technological advance, which sometimes favors metals, sometimes doesn't. You know, those signals all roll up, and then you see them manifesting on the market each day. Like I say, yesterday we saw the spot price of copper go back above the 3-month price, which does suggest a short-term supply squeeze. And ultimately, it's about how we trade through those things, and then we look at how it delivers over the medium term.
We are all tracking the comments coming out of Beijing and Washington right now. It seems like there is potential for an escalation in the trade spat between the U.S. and China. If we do see an escalation and we do see President Trump put some of these threats back on the table, which he seems to have taken off over the weekend, what does that mean for the copper trade if we see renewed tension between the two behemoths? Yeah,
absolutely. So most of what we're seeing at the moment obviously is on the rare earth side that don't tend to trade on exchange. They tend to be sort of very tight supply chains, very small supply chains. But I think we do need to learn the lessons for copper. And again, that has been one of the conversations that we've had during LME week, has been how do we ensure a diversity of supply? And that's really what every nation is looking at the moment. You know, some of the things that we're trying to do to enable that are making sure that with our brand listings, you know, we want to bring on brands from around the world. So this year we've got new brands on the LME from Africa, from Europe, and from Asia. So you want that diversity. You want that diversity of delivery locations. But there's also this really interesting conversation, which we've been having all week, about the West now reinvesting in smelting capacity, because there is a desire to have that, as I say, that diversity of supply chains, and you need to make sure that you're then investing in the smelting. And the final thing I'd just say on that is, you know, sometimes what holds us back in the West is the environmental standards. And so one thing that we're looking at is whether we can discover, as it were, a sustainability premium, because it would be helpful, don't know if it would happen, but it would be helpful for some of these Western smelters to be able to be paid where they're investing in sustainability around the world, but a lot of the Western players happen to have that characteristic.
Final question, since you've got all these traders in London as well. It's, and those who know. I worked for Credit Lyonnais Rouse in the mid-90s. And if you know what that means. And there was a lot of speculation, some of it not allowed. I didn't work, by the way, for a desk on commodities. I worked on the life market. But I worked for Credit Lyonnais Rouse in the 90s, which was involved in one of the most unsavoury episodes, as indeed was the LME, in that period as well. Do you think there's speculative manipulation of price going on now?
Yeah. So a big part of what we've been trying to do is to enhance transparency across the market. So, you know,
because more recently there's been problems.
No, absolutely, and I think every time these things happen, we can learn from that. So if you look at now the number of reports that come out of the LME, you know, just this year we've introduced what we call our off-warrant stock report, and that's designed to give visibility over the metal that's sitting in stockpiles but aren't yet warranted on the exchange. And it's those kind of steps that I hope will help create a more democratized trading market where everyone can get that data and trade off it.
Matt, I hear what you're saying. Just one more. I have one more go. Do you think there is speculative manipulation of the copper market?
No, we're very comfortable from the perspective of the LME copper contract that is a very well governed.
That was a brilliant answer. You just mentioned on the LME contract. I didn't ask you about the LME contract. I asked you about copper.
Yeah.
And I know specifically you want to talk about the LME contract because the problem was elsewhere.
No, understood. So no, I can really only talk about the LME. We are certainly trying to, for example, with our OTC disclosure, to shine a light on a broader set of the market. But ultimately, I'm here to look after the LME.